all those guys, when they started under a new, type of infrastructure. They have been built from scratch in a very different way, and the way they operate and how they are asset light and all of that is very different from the big players. And how have you been witnessing like this change of the incumbents facing also the challengers, and there's a lot been going on, and they still struggle with legacy systems and all of that, and they've been surpassed, like Nubank you just mentioned it. They are like the number one brand in Brazil, so they even surpassed, if I'm not mistaken, Petrobras, which is an oil company that we have here as one
That's
of the...
awesome. I gotta use that stat, man. That's amazing.
So the last time we spoke in your podcast, I said it was third place.
Yes.
And the Petrobras is the first place.
Right.
Another recent article that I read, it was overtaken by Nubank. So how we still see the incumbents navigating that. Did they are they getting how to do it right now after all they saw, after the initial doubt that happened like long ago? It seems like a long time ago, but I still see that some players didn't grasp it in that way.
It's some people have described digital transformation of the banking sector like trying to replace an engine on an Airbus while you're flying at 30,000 feet, and it's not hard. That's the point. But here's the thing: when we launched Movin', and subsequently after you saw we launched Movin' in 2011, then you had Simple was late 2010, Fidor was 2010, and then Starling was late 2013, early 2014. Then you had Monzo, then you had Nubank, WeBank, and stuff come along. So it was those first 5 years of the 2010s where you saw this explosion of possibility. And back in those days, what did you hear from the incumbents? These guys are never going to make money.
Yeah.
They're never going to be profitable. They're only growing at this rate because they're so small. They'll never be able to manage risk as good as us. There was a broad denial that this industry needed to change.
Sure.
But as we can see with these brands that have been so successful, that obviously there was a latent need for better banking powered by digital to reduce friction and just make the experience better. And that's how the challengers have won. They've won on experience and simplicity. Yeah. So the banks have rejected that as a premise because, their process and policy and technology stack really created complexity.
Yeah.
I mean, the argument for banks for so long was the reason you need to speak to a banker is because we have such complex products.
Oh, yeah.
Right? Whereas a digital, player is going to say, let's reduce the complexity. Let's take the complexity out.
Exactly.
And so today you can't say these banks are not profitable. Nubank is one of the most profitable companies per employee in Brazil, as WeBank is. You can't say that they're only growing because they're small. Nubank is the largest bank outside of Asia, right?
Exactly.
Revolut is larger than the biggest banks in Europe. You can't say that they're worse at managing risk. WeBank, Alipay's lending practice, Nubank's credit card business, they all have much lower delinquency or NPL ratios than the traditional banks because we now understand managing risk is a data modeling problem, right? It's not a policy or process issue. So the only thing that's left right now is the banks are saying, yes, but they don't have the asset size, right? And my answer to the banks on that is, please explain to me, how is your asset size going to help you absorb artificial intelligence into your tech stack and be competitive in the next generation of banking? And the answer is it won't, right? So maybe 10% of the incumbents will make it through the next 20 years. And I think by the end of 2030 timeframe, I think you're going to see incredible consolidation in the traditional banking space in markets like continental Europe and the US and Latin America, where the digital players have become so dominant and so built into the framework, particularly with AI-based agency, that you're going to see a massive consolidation. Some fintechs will buy some banks to get assets, but
in the retail space, right?
No, corporate as well.
Corporate as well,
because
right?
I think think of what's going to make a big difference in terms of banking and operational efficiency for a business. It's going to be able to integrate autonomous finance into your business,
Exactly.
right? And the banks are still asking corporates to sign pieces of paper, right?
Yeah.
So the smart contracting stuff, it's going to be companies like Adyen, Stripe, Nubank, and so forth, I think, that are building that next generation infrastructure. Nubank's acquisition of Hyperleap is a good example of this. We are starting to see Stripe is doing some amazing things there. Klarna, out of the EU. So the next generation of AI-based banking infrastructure is most likely going to align with the technology stacks that are agile enough to support it. And this is not the fragmented silo technology platforms the banks have. They have to essentially, like Itaú and HSBC have to essentially become Nubank or Revolut from a technology and culture perspective to be able to compete. And that, for those types of banks, given their structure and the way they think, is going to be extremely difficult.
And it's a matter of to be able to do so is a matter of imploding what they have.
Yes.
And rebuild.